Hi everyone, thanks for turning up and thanks for taking time out of your day to come to this talk. We think it's very important at Zhoosh to promote financial well-being at work, and this is part of the program in delivering that. I'm joined today by Finwell, so we've got Ryan and Justine joining us. We've also got a chartered financial planner from DGS IFA, Ian, who's joining as well. So actually, it is possible as well after this meeting to book a meeting directly with Ian, should you want to do that. At this point, I will pass over to Ryan and Justine.
Brilliant. Perfect. Thank you, Simon. And thank you, Kaylee and Ian and the rest of the team for putting this together. Thanks for everyone for taking some time out in your busy days to join us, which hopefully will be a really interactive and engaging session. So I'm Ryan. We'll do some formal introductions in a moment. But just to frame this session, really, as you can see on the screen, protecting what's important, such a key part of financial education, financial well-being, financial planning. I think the last few years we've seen the need for this, what with COVID and lockdown and the pandemic and everything else. It is so important to protect ourselves, our health, but also financially. So we're going to go through this really and look at lots of different elements of protecting what's important. But just to say, the main thing that we try and get out of these sessions is, as it says there, to talk about money. And we found that there's a massive need for that. There's a big stigma that needs to be smashed around talking about money, even bigger than the mental health and well-being, actually. So that is definitely the step. So we'd love to get some engagement around some of the questions that we'll ask. But just moving on, just with regards to introductions then. So as I said, I'm Ryan. I'm the founder of Finwell. I'm a qualified financial advisor, diploma qualified financial advisor as well. Been in the industry about 10 years and really love the advice process, but just saw the real need to help employees learn the basics, really. We don't learn the basics at school. So there's a massive need for us to do that at the workplace. I'm also a mental health first aider. I'm passionate about that. It's really important to me. And through personal experience, really, in lockdown and friends, family, there is, intrinsic links between our finances and our mental health and well-being. And I think it's the biggest driver of stress and anxiety in any report that you might wish to look at the moment. I'm also a workplace financial education specialist. So hopefully we know what we're talking about, but you'll be the judge of that. And I'm also joined today by Justine. Justine's a key team member of Finwell, has been in financial services for almost 30 years, although I'm sure you wouldn't believe it looking at that picture. And what she doesn't know, about money management and financial well-being is not worth knowing. So great to have Justine along. Just to give you a quick insight into Finwell and what our philosophy is and what we're all about, we want to try and achieve these three things. We want employees over time, so this doesn't happen overnight, but over time, we want them to understand, actually measure and improve financial well-being. We need to understand what financial well-being is all about in the first place, and then we can take steps to improve it. And we cover lots of that in other sessions. That hopefully leads on to healthier relationships with money over the long term, which is really important. And that then hopefully leads on to better mental health as well. This session, as we're going to talk about kind of protecting what's important, is really one of 5 key areas of focus that we talk about at Finwell. You can see the others on the screen there. And again, we run sessions on all of these and more. There's kind of sub sessions that spring off from each of these key areas of focus. But today we're going to talk about protecting what's important. I'm going to hand over to Justine and she'll talk us through today's agenda and we'll get cracking. So over to you, Justine.
Brilliant. Thank you, Ryan, and thank you, Simon and the Zhoosh team for inviting us along today. So We're going to start off by asking some questions, and we're going to ask you to get involved with the polls. We've got a couple of polls we're going to have a play with. And also, please do share your thoughts as well in the chat box as we go. But the first thing to think about really is what some of the things that might happen to us during our life's financial journey and the risks that they pose. Okay. But also, interestingly, why we don't potentially consider these things, and why we should look at protecting ourselves and our families as well. Now, how we go about that in terms of protecting our income and our families and our future can be complex areas. So we're going to have a look at some of the options and some of the things that you might want to consider as part of your financial planning, as well as trying to break down some of those myths and misconceptions that people might think about when it comes to protecting ourselves and our families. In addition, there will be some additional resources, and we are joined by Ian as well today for any questions that you might want to pose as part of the session. But please do get involved, and let's get going. And we've got our first question up on the screen now is all about financial risks. And I've got a quick question just to pop on the screen. Hopefully you can see that poll there. Please do get involved. So what do you think? What percentage of UK adults do you think currently have existing life insurance? Do you think it's 20% of the population, 35%, or 50%, or 70% even? Let's have a look and see what you think. Brilliant. Thank you everyone for getting involved, and I'll just share what you think on the screen. Hopefully you can see that there. And what's interesting is most of you went for 50%, but actually I'm going to tell you the answer is 35%. So actually only 35% of people have life insurance, despite 6 in 10 households agreeing that it would be beneficial for them and their families. Okay. And one of the main barriers to that, in fact, nearly a third of those people believe the reasons why is because it's too expensive. And we're going to have a look at breaking down some of those myths in a little while. But it is important to us understand that things can happen throughout our lives that can impact the well-being, not just of ourselves, but of our families too. So let's have a look at some of these main financial risks that might come along. And we talk very much about the unexpected, those life things that happen, the car breaking down, or even something bigger like an illness or a redundancy, for example. But these are some of the risks that really can hurt us and hurt our families going forward. Losing our jobs, loss of an income is an immediate impact on our day-to-day finances. Okay. And if we aren't protecting ourselves and we don't have those emergency funds in place, then we put even more pressure on ourselves and our mental health going forward. And personally, I was made redundant about 5 years ago, and I found it a real strain, both financially but also from a mental health point of view, that puts pressure on people. So that's a real risk to you and your family. Sometimes, the risk of having an accident or an illness, a serious illness, sometimes means people can't go back to work, and that's going to have a fundamental impact on your income and your ability to pay those bills. Equally, unexpected death, it happens, okay? And equally, there are lots of implications when it comes to tax, in particular inheritance tax, and that can be a risk as well if we're not planning for those things or protecting those things. We've got some surprising stats here to share with you, and I just shared one of them there about the 35% of people only having life cover means 65% of the population don't have any life cover at all, which is really quite staggering here. Also want a couple just to pull out. 375,000 redundancies last year. That's increasing. Currently in 2022, 1.5 million people were made redundant. And you think about all of those impacts during the pandemic as well, when it comes to people that were unexpectedly put onto furlough and all of a sudden starting to have difficulties with their finances. This is an interesting one about the amount of money in savings, and I would suspect that number's increasing. 16 million people at the moment in the UK have less than £100 in savings. So those people, if something goes wrong, even if it's just the boiler breaking down, are going to struggle to cope with some of those financial shocks that kind of come along unexpectedly as well. We also know that serious illness, I think 1 in 2 people now are likely to get diagnosed with some form of cancer at some point in their lives. So it's kind of inevitable, really, that it's going to happen to someone you know or someone close to you as well. And even more scary when we talk about things like wills and, how we're preparing if something happens. 2 in 3 people here in the UK have no wills in place, which, is a worry if something was to happen further down the line. So these are all the reasons why we believe that there's some compelling reasons here why we should be considering protecting what's important. But there are many reasons why people don't protect themselves. So we've got a couple of people here on the call today. I'm going to ask you just to let me know. Let's see if we can get the chat function going. So would you give me some examples, Kaylee and Ian and Simon, why you think people don't protect themselves? What gets in the way and stops people from looking at these considerations that are really important? So what do we think? Feel free to let me know in the chat box. Thank you. Yeah, brilliant, Kaylee. Yes, income. Okay, particularly in the cost of living at the moment with everything rising, then people might be finding it difficult to find that extra income in order to commit to protection. Okay. Yeah, I like that one. They don't like thinking about it. It scares them, that whole burying their head in the sand. People are very much in denial, as well as people think they're invincible, that this will never happen to them. Absolutely. And definitely, Simon, unsure of where to go and therefore, may end up not doing anything or procrastinating as well. And lack of understanding and education, not sure what's needed and what's important. So these are all, very valid reasons why people don't protect themselves. So let's have a look at some of those. You've mentioned some of them already there on the screen. So this whole burying I like the ostrich, the burying the head in the sand. Okay, it's a perfectly natural thing to do when we're unsure or unclear or uneducated. We very much think we'll worry about it tomorrow, or we'll get round to doing it. Okay. Cost definitely, Kaylee, does play into this, but it's the lack of knowledge. It's a perception rather than a reality, I think, when it comes to cost. And it's that lack of knowledge that makes us think we can't afford it when actually, it's not as expensive as people might think. Life definitely gets in the way. So, we've got other priorities, right? We've got other things other bills to pay. And, time ticks on. And, when I was younger, I used to think I'm invincible. I don't need to worry about getting an illness. I'm never going to be in a car accident. I'm never going to be able to be out of a job. I've been in a secure job for 25 years. And then lo and behold, something happens, right? So we're not invincible. Okay. Some people might also think that, we're reliant on the government. The government are just going to bail us out, or we'll just, be eligible for benefits. And if I can't work, they're just going to pay me, right? But actually, you do have to wait quite a long time to get access to benefits. I think someone said to me the other day that if you want help on paying your mortgage or the interest on your mortgage, you have to wait something like 10 months before you get any kind of benefit for help on your mortgage payments from the government. So, we do need to think about how we can look after ourselves and not rely on the government as well. And there is a lot of mistrust, I think, out there. People think that, it's the banks are just after my money, or a financial advisor is just going to, scam me. And that isn't the case. But that, sadly, sometimes is what gets in the way of people taking the right actions. Okay, so we're going to have a quick look now at the reasons why we should protect ourselves. So let me ask you guys that are on the call now, again in the chat, just tell me why you think people should consider why do you protect yourself? What's important to you? Why should we protect ourselves? So let's see what people come up with here.
I was just going to mention, Justine, Ian, rather than in the chat, if you want to come off mute and just share just a couple of ideas from an advisor's point of view, the reasons why. And obviously, having been an advisor, protection is, the cornerstone, as we call it, of financial planning, and really the first thing we need to think about even before investing or our futures or pensions or anything like that. But maybe if you wanted to share a few thoughts yourself.
I think you've hit the nail on the head, Ryan, in the sense that protection is the thing that underlines everything, because everyone talks about having plans for retirement, plans for doing this, that, and the other, which is all well and good. But as soon as you get ill, everything falls by the wayside. And without having your income, I mean, a lot of people talk about, oh, you have your home insurance, you have your car insurance, you have pet insurance, which is all well and good. And people paying in this amounts, especially for pet insurance, as an example. But the most important thing is, well, what pays for all of that? It's your income. What have you got in place to stop to protect your income if anything was to happen? And people just don't think about that. They think, oh, work will happen, this work will pay for it, my family will pay. And the reality is, no, it doesn't work like that.
Very true.
And I think if you put that plainly and clearly and show people the effects of, well, if you did fall sick, what's going to happen, then their shift, their mindset changes. And the fact is, it's a fraction. To get cover, it's a fraction of the cost for what benefits you're going to get out of it. So I can go on forever on this, but
excellent. I'll come back to you in a second then. But I think you've touched on a good couple of points there, and it is that underlying fundamental of everything, isn't it? Is your income covers, every area of your life, and without it, what would we do? So you're right, Ian, as well, about peace of mind. So it's knowing that if something does happen, we can get rid of that fear, doesn't it? It removes the what if effect, if you like, as well. The thing about the family, you're absolutely right, Kaylee. If something happened to you, what would happen to your children? What would happen to your son? Who's going to look after them? How are you going to afford to, pay for them? Kids are expensive things, right? So a few others here as well. It buys us a bit of time. So if we have protection in place, particularly income protection, it allows us to consider the next steps. So for example, if you have an illness or an accident and you can't go back to work, but you've got something in place that's going to help you in that time, then it gives you that time back to think, actually, what's next? What's the right thing for me, but what's right for my family? So you don't have to rush and make decisions or take another job just for the sake of it. And maybe you're not able to do that. It gives you recovery time as well, particularly if it's an accident. But even with a redundancy, it buys you time because you can then decide what's right for you. I like Ian's point as well about, we're good at insuring our pets and our mobile phones, but we're not very good at protecting ourselves and our income that underlines absolutely everything. And there are huge implications, aren't there, for all of these? If we lose our home and if we haven't got our income protected, then what's going to happen to our wider family? So these are all the sort of compelling reasons that we think that we should be considering different types of protection. Okay,
Justin, I was just going to add on that, like from my point of view, who likes paying for insurance?
No
right?
one.
That, absolutely no one. If anyone does, need to look at yourself. But nobody wants to pay for insurance because it's something that might not happen. But I think it's really important to understand the risk first, because again, the risk, as we said a little while ago, is increasing because we are sort of facing these challenges as we get a little bit older. So facing it and then planning for the future to give us our peace of mind, so important.
Brilliant. Right, I'm handing over to you now, Ryan, to have a look at how we can go about doing this.
Perfect. Okay, excellent. I've gone on too far there. So next part of it is really to look at some of the options, I suppose, and more of an educational aspect of the options available and what we can do in different circumstances. So our biggest tip and the first step, really, we talk about emergency funds an awful lot, and financial resilience we talk about. And that really is just having money behind you, and again, the stats are shocking. As Justine mentioned, pretty much 20% of people have less than £100 in savings. And why is that? Well, we weren't taught this stuff at school, and times are tough as well. But really, really important as a first step is to look at debt, obviously, and to try and cut that down, or unmanageable debt, but then to start to try and build up our emergency funds. And I think it's always the way. I've known this from personal experience. There's been times in my life where I've had a good buffer of money, and you know what, nothing went wrong. The car ran perfectly well, and the boiler was working well, and nothing really came up. And it was only as lockdown came in and things got a bit tighter and we had to dip into that, I was almost at the last little bit of our emergency fund. And guess what? That's when the boiler did actually go and the car did break down. The silly things that happened, like the dishwasher broke, and then the microwave broke as well. So it seems like they all gang up on us when they know we haven't got the money. But it's definitely better to have it and not need it rather than the other way round. It's worth mentioning just on this that we get asked an awful lot, well, how much should we have? You know, what is the right amount of emergency funds to have in place? And there's no right or wrong answer. It's really how much peace of mind do you want? But as a guide, we talk a lot about the 50-30-20 rule in other sessions, and it's a really good way to kind of budget and proportion your money. So working out what your kind of committed outgoings might be on a monthly basis, so the things that you have to pay for, such as your mortgage or your rent, the bills, food, you know, travel to work, whatever it might be, working that monthly amount out, and then working towards building up to 1 month's worth, just as a starting point. So maybe setting up a direct debit or an amount that's going to go out as you get paid. That first day you get paid, that goes into an emergency fund. And maybe once you achieve that first month or a month's worth, then trying to get 2 months, and really trying to build up anywhere between 3 and 6 months worth. And I'm sure Ian will echo this, is a really healthy position to get into financially. And really, once you've got into that point, then you can maybe look at, investing and the future and other things that are a bit more positive. So that's emergency funds anyway, the first one there. That explains a little bit about it. We've got mortgage protection as well. So all of these are pretty much insurances. But obviously, if something was to happen, that will protect you for a lump sum amount that can pay off the mortgage. Typically for people, the mortgage is the biggest amount of borrowing they might have. So, at least that's taken care of. So that will be a monthly contribution that you would make out of your earnings. And then if something was to happen, then that would be paid off. We've mentioned income protection. So really an important one to think about to start with. So protecting your income should you be made redundant, or should you not be able to work for whatever reason, really, really important. And again, that will be a monthly contribution that you pay in to the insurance, and then you would get paid out if something was to happen to you. Then we've got life cover and critical illness protection. So really, really basically, on basic terms, life cover, if there was a death, an unexpected death, then that would pay out a tax-free lump sum. Important to know that it can also be called death in service. So as an employee benefit, lots of companies will have death in service. It might be 2, 3, 4, 5 times salary, whatever it might be. But really important to understand what is in place first, and if there's any need to top that up, should you need to. Critical illness is a little bit different. So again, it will be a contribution that you pay in on a monthly basis, but it would pay out should you be unfortunate to have a serious or a critical illness. Really important, though, on a bit of a positive note, that yes, these things are becoming more common, and Justine mentioned, the stats around cancer and other really serious illnesses. But the positive is that technology and medicine has also advanced. We're living longer now, and the recovery from some of these illnesses is improving as well. And the fact that having critical illness or serious illness in place, it will still pay out, or should pay out, if you survive that illness, which is really important. Other ones, just to touch on, private medical insurance. So I'm a massive fan of the NHS and the great work that the doctors and nurses and other staff do. But there's the option, either through employee benefits or personally, to take out additional private medical insurance to speed up the times or get additional support if it's needed for you or your family. There's other things to think about. such as wills, we've talked about already, but other things as well, such as pension beneficiary forms. We talk a lot about this on sessions where a lot of employees don't really know what they are, or definitely aren't confident that they've been completed or reviewed or analysed in the last few years. So there's lots of things that we'll share after this session where you might want to consider, sorting out a bit of a to-do list and making sure some of this is done. With regards to the pension beneficiary forms, really it's just a form that assigns who would benefit from your pension should anything happen to you. And you'd think that it would automatically just go to a next of kin, which it could, but by having this form signed, it can save a lot of additional stress that would be inevitable in that situation. Again, just to touch on the fact that with these insurances, we can take out plans for a certain amount of time. We could have it for our whole of our life and we'd be covered until the day that we die, or it can cover us for a set amount of time. And I think that's quite important, because if you look at the stats and the likelihood of something happening and the cost, that's going to dictate how much you have to pay and the actual risk. So you can look at protecting yourself for a key amount of time. Was there anything you wanted to add on that, Ian? I'm just aware you'll probably be thinking about all of these policies and products and having a few thoughts. Anything you want to come off mute and just add to that or comment on?
You covered off quite a bit there, and I don't think there is anything else. Well, one of the most common things I find is when people have like pensions, they don't update their death nominees, which you was talking about. But also another thing I find is quite common is people set up these huge amounts of life insurance policies. What they don't realise is sometimes by doing that, they can end up causing themselves potential inheritance tax liabilities. So you can do simple stuff like arrange them in trust to avoid that, but there's small little bits and pieces that can be done, which people don't do, which could make problems worse, but it can cause a bit of a headache in the time when you don't want to be having a headache, if that makes sense. So I think sometimes it's always good to reach out and get some advice and speak with someone, even if it's just them pointing them in the right direction rather than just going into this blind, if that makes sense. Because the last thing you want to do is, if you're not here, you don't want to put your family through any more hassle than you need to. So yeah,
definitely. And I think as well, it's important to review what you have got in place, like you said there, because I've seen it in the past where lots of people might be underinsured and need to top that up and think about that. But by the same token, there's been clients that have been overinsured for whatever reason. They might have got the wrong plan, but they might also, their circumstances might have changed, and really regular reviewing of your protections really, really important. Really, yeah, thanks for that.
A big common one I find as well is when people move home, they take out a bigger mortgage, leave what they have in place, and don't realise actually that what they had was probably not fit for purpose. It's just based on the mortgage they had 10 years ago, and now they've got double the mortgage over a bigger term. So yeah,
regular reviews. Yeah, no, spot on, definitely. Okay, so next up, we're just going to cover off some of the things that happen with regards to our finances upon death. Not a great positive subject to talk about, but very, very important. So what we talk about here is dying intestate or intestacy rules. So we work with lots of legal firms as well that can help support this, especially wills, lasting powers of attorney. We've mentioned there the importance of pension beneficiary forms. So definitely look at that, or look at some of the links that we'll send you and what the options are. Powers of attorney. Justine, I was going to come to you actually, because I know you've got a bit of a personal story to sort of share on this, and how it actually helped by having this in place.
Yeah, I just wanted to just quickly say, I've just popped that poll up on the screen. Not sure if you can see it there, Ryan. How many adults do not have a will in place here in the UK? So I've got a couple of responses there. But believe it or not, the answer is a staggering 31 million people that don't have an up-to-date or even anything written down, which leads us on to this. No, yeah. So powers of attorney. Yeah. So I suppose I didn't know much about this, and this is probably very typical of most people until you're faced with something quite difficult. Okay. And I was about 6 years ago now, my dad was diagnosed with a terminal brain tumor. And, you know, he'd gone from being fit one day to having a seizure to then being in hospital to be told he's only got 12 months to live. And although that was a very, you know, sad time and very, very emotional, my dad was always the practical one, and he was always the one about making sure that everyone knew exactly what was what at any given time. And whilst we were aware of his will, and you know, we sat around the kitchen table and, you know, made it very clear about what was happening and who was doing what, etc. What we hadn't considered was a power of attorney. And I was aware of what a power of attorney did from a financial point of view, as in it gives you the power to deal with financial matters and access to accounts in the event of someone else not being able to. But I wasn't aware of a health power of attorney until such a time as we were sat talking to nurses about my dad's end of life care. And it suddenly became clear that he had very specific wishes about how he wanted to die. And he made that very clear as part of the process. You know, he didn't want you know, particular drugs. He didn't want it prolonged. You know, he very much knew exactly what he wanted his end of life care to look like. And I'm very glad that we did do that at a time that he was able to do that before he died, because as soon as he died, or was about to die, one family member decided that actually he needed extra medication, and I had to step in and say, no, that's not the wishes of my dad. This is what he said. Here's the power of attorney. And it caused quite a bit of friction, but if I hadn't have had that to help me, you know, there'd have been a lot of, you know, family disagreement. But for certainly from my dad's perspective at the time, it's what he needed, and certainly from my perspective as the main beneficiary, it's what I needed as well. So I'm a big fan of talking about the need for power of attorney.
Yeah, brilliant. Thanks for sharing that. And just again, just shows the importance of finding out about what these things are and how they can be of benefit to you, and then taking action, obviously. And just something on the wills, as you can see there. Again, I think my attitude towards protection was very different before I had children. I've got a 3-year-old and a 6-year-old now, and it almost becomes a selfless act to try and, you know, make sure things are in place. It doesn't become about you anymore. It becomes about, you know, your partner and your kids. And yeah, really important to look at wills. You would think that, you know, if something was to happen to you, everything will just go to your partner, and that should be the case. But again, with regards to intestacy rules, if you do die without a will, which is what that means, it can just cause an awful lot of stress and delays as well, which you don't need. And if your family situation is a bit more complex, as is becoming more common now, even more important to look at getting structured wills in place. Just looking here, yeah, Simon's mentioned most people with children do not understand that it's really important, yeah, to look after the kids if you're not around. So yeah, definitely consider that. So the next section, we're just going to look at some of the options and some of the costs that might be involved as well. Have we got another poll, Justine, or not?
No, not at this point.
Okay, we'll edit that bit out then. That was rubbish. But yeah, I'll just go on actually to the options and the next steps, because I think that's important. So some of the options that are available to people you can see here, and some of the next steps that we would recommend thinking about. So the first thing is to review, you know, your affordability and what's already in place, because you might be surprised, you know, with what you have and what you're already covered by. So definitely take a look at that. Then look at what your actual employee benefits are offering. This is probably one of the biggest things that we see with the companies we work with. They're really fantastic benefits available to employees, but the communication of them is quite challenging, and a lot of employees don't know all the things that are available, or maybe don't understand how they could impact their personal situation. So really worthwhile having a bit of time to review what's available. Then just having a look at getting some quotes. So again, you might be surprised how cost effective some of these protection plans that we've talked about might be. Really important that you understand it can only get more expensive as we get older, and maybe our health changes. It's never going to be as cheap as it is right now. So definitely get some quotes, either on some of the websites. You can look at some of the options just to get the quotes, or speak to professional advisors like we've got on the call. The really important to know as well that it's up to you whether you want to share, medical history and personal information, but there'll be no additional cost when it comes to protection by going through the advice route. As it says there, take professional advice. If you're if you're in any doubt at all about this, take professional advice. There's a couple of websites that are well known and trusted where you can find financial advisors. Again, obviously, we've got some on the call, but this way you can look at testimonials and client case studies and things like that, and do your research beforehand. So just some of the myths and misconceptions that we hear a lot of, and again, I'll invite Ian and anyone else to add any to this, but the biggest one that we see is around cost. I think Kaylee mentioned it at the start of the call, that cost's a big factor of maybe what puts people off, but finding out how much it might cost you and how cost effective it might be could be a bit of a change for you. Again, looking at your age, it will be dependent on your age, your health conditions, and also your location. Where you live actually can impact the contributions and the cost that you have to make. And as I've said, acting now, because it is the cheapest it's going to be. I mentioned a little bit there around commissions. So if you do take financial advice, any additional fees will be paid by the providers. So it's no cheaper actually to go direct to insurance companies at all. But working out the risk and the probability of something actually happening. Do your research and understand, without sort of scaring you, the likelihood of something happening and how much peace of mind you might get by putting something in place. The payout probability, and this might be one, Ian, that you can sort of add in your thoughts on. There is a bit of a misconception around the fact that, the insurance company just won't pay out anyway. What's the point in paying into these plans, because they're just going to try and get out of it or not pay. But I think the stats are quite high with good trusted providers. And then the last one that we see a lot is the myth around death in service. And there are no silly questions or silly ideas when it comes to this. But a lot of people believe that you have to die at work to qualify for that payment. And that's just one we need to change immediately, that it's just an employee benefit, that if you was to die while employed at that company, then it would pay out. But it doesn't have to be actually at work, especially in the times that we find ourselves now with hybrid working and working from home. Was there any more, Ian, that you see, any kind of myths or misconceptions or concerns that people have that maybe they shouldn't have?
No, I think you've hit a lot of the stuff on the head. One thing I do see, though, is a lot of people rely heavily on death in service, which is fine, but they fail to realise if they change careers, for example, go self-employed, go to a smaller firm, then all of a sudden they're left with a massive gap in terms of cover or needs, which means if times got hard and then they did fall ill or sick, then they ain't going to have any cover in place potentially. So I said, although death in service is a great starting point, don't rely solely on that alone, because it's not guaranteed the company can take it away at any given point. But other than that, I think you've covered a broad range of topics and misconceptions very well. There, so
good stuff. I think that the two things for me are: check what's already available, because you don't want to be paying out, if it's already available through your employer. But then look at what additional personal protection you can put in place. It's exactly for that reason that you may leave that employer at some point. So knowing what's available and what you might need to add is really, really important. And also,
I was going to ask a quick question, if that's all right. I was just going to ask Ryan and Ian, actually. What is the payout probability like at the moment? Because I think that is a big misconception. I'm going to pay for something that I'm never going to get my hands on, even if I do get ill, or what's the probability like?
It might be a better one for you, Ian, if sort of dealing with it more hands-on.
Providing the information they give is correct, and they don't provide misinformed data, or they don't tell the truth. I would say 97% of claims are paid out. I wouldn't quote me on that to be precise, but it's a very, very, very high number. And people forget, or not don't forget, they don't understand that actually companies go above and beyond and pay the money out very, very quickly. And they also do other stuff like within this. You get, for example, I know like some income protection policies, you get access to see private GPs, and there's other benefits contained within these policies that people don't know about. For example, free cover for their children. And there's lots of little quirks out there that providers offer now, as over and above recognizing the need that mental health is a big issue. There's a lot of changes, and stuff evolves. Companies have added more features now, and I think they offer better value for money than what they did, say, 10 years ago. So,
excellent. That's good to know.
The other thing I was going to say is something that when I was advising, a lot of people didn't realise that if you do take out an insurance policy directly or through one of the comparison websites, that's absolutely fine if that's what you want to do. But if it does come to making a claim, you might have more peace of mind knowing that you've done it through professional advice, because you can go to them first. They'll have a relationship with the provider and be able to make that a much smoother process as well. So people don't normally consider that. And the last sort of tip I would give is, we talked about if there's a change in situation, with you personally, if you do move jobs or you move home or any big kind of life change, that's the good timing to try and get protection and other financial planning reviewed, really. So that's pretty much it on the session. Just with regards to some additional resources and things that we've put together, we've got other resources. We've got this infographic. We've actually got infographics of all of the key areas of focus that we covered. So the money management, protecting what's important, the property ladder, investing in your future, and modern retirement planning. But we'll make sure this is made available through the team at Zhoosh. Quite a nice infographic that can be printed off or emailed out. And we've also got some QR codes that link through to different bits of information as well. And we've also got an employee's guide to financial protection. So if anybody wants to have a look at that, we'll send that round through the team, just to give you the basics, really, that you can refer to if it's of interest. So it just leaves me to say thank you for everyone taking some time out to spend with us today. Thanks to the panel as well, and back to you, Kaylee.
Thank you so much, guys. That was absolutely brilliant.